Welcome to the Road to 100 Million in Real Estate podcast, where you'll benefit from the opportunity to learn to become a skillful real estate investor. You'll get guidance from top industry producers, operators, and investors who are eager to help you learn from their proven strategies of success. Now to your host, Dorrance Constant.
Welcome, everyone, to another episode. I'm your host, Dorrance Constant. Today, I've got another special guest on the show. I've got Chris Long. Chris, welcome to the show.
Thanks. Happy to be here.
All right, Chris, great to have you as well. And I want to make certain our audience does know a little bit about you. Before we jump in, folks, Chris is the founder and operator of Longyards Storage. He started as a carpenter and business owner of Conrad Construction before working full-time in the self-storage business in his hometown of Ottawa, Canada. Soon he immigrated to the United States to expand his business. Chris studied carpentry and construction technology at Algonquin College and Applied Arts and Technology in Ottawa. Again, Chris, welcome to the show.
Yeah, I'm excited to chat. Love it.
All right, awesome. Now, Chris, it sounds like it looks like you got a bit of a tan on you, man. And isn't it winter time?
Yeah. Tampa's nice. I just flew back from Canada, actually. So I had the cold for about 7 days and I do not miss it. Lots of snow.
Yeah. So you made the transition from Canada to Tampa. How's that been for you?
It's been great. Such a great for family, great for weather. Tampa's amazing. Lots of new job growth, massive opportunities. So I'm loving it every day.
All right. That's great to hear. Tampa's a great town. I had a lot of friends that worked to school in what is it? UCF, right? UCF is in Tampa? Is it USF? Or is it USF? Yeah, it's USF. It's been so long, man. Well, great. Well, we start a show very often a similar way, and that's, understanding how has real estate impacted your life. Take it away.
Yeah, so great. Basically, I started off as a carpenter, and so I am a licensed carpenter, started off in the trades. And that's how I integrated into this business model. I found a need and I built a business around it. But starting off with real estate, I basically, I was doing houses, turned them into duplexes. I did the first one. I was like, oh, this is nice. You got a tenant paying your mortgage. I like this. Did the second one. And then I quickly discovered that there's a bit of economies of scale. In Canada, you can't really, if tenants don't pay, you have a lot of limitations. So I was like, I still love real estate, but I'm getting something different. So then this is why I built Longyards. I figured storage, you have more control. It's commercial. Built my first facility. And so that's a little bit about my real estate journey, starting off with residential, going into commercial, and, happy to dive deeper into Longyards. And that one property changed my life. It allowed me to move to Florida, and I'm excited to talk about it.
Oh, really? You saying that one property actually changed your life? Yeah. So I'd love to hear more about that.
Yeah. So one property, I did a vendor take back. We got it for $470. Now, it was a rough looking property, so kind of like a flip in residential or multifamily, you go in there and do your value add and all the same language. So I found this property and it was, zoned what we needed to be, and did the vendor take back $470. And it was funny because I was trying to get investors to get behind me. I'm like, come on, guys, let's raise some money and get this going. And of course, everyone thought it was crazy because they're like, what are you doing? Like yards? Like, you're nuts, man. So I'm like, no, I'm not completely crazy. I'm a very simple person. I figured if I need this, somebody else needs it. Mm-hmm. And so, I had to bootstrap it, got it going. I put around 200,000 of my own capital into it. And then we leased up the first phase in 6 weeks. So I knew at that point, I'm like, okay, there's something here. I know I need it. Other people need it. Sure enough. I put between my money and the investor's money, 700,000. So you're around 1.1, 1.2 total. And it's worth over 4 million. So that one deal, and it cash flows enough for me to, support my family in Florida. So one deal changed my life.
Oh, that's fantastic. So essentially you were in the market, you noticed that there was a need in the market for you specifically. Yeah. And then you were able to think, hey, if I need it, there could be other people who need it. And you had enough grit, right? where everyone else, it sounds like a lot of people told you, no one else would need it, but you believed in it so much that you went after it anyway. Is that right?
Exactly. I was literally putting fence posts in the ground, cutting trees with a chainsaw. I bootstrapped this, and everyone else is like, you're crazy. This is not going to work. And it's so simple. Think of the market for self-storage, a little box, and how many people it goes to. Well, mine is just bigger. It's a fenced-in yard. And I was like, how can this not work? And I was convinced stubbornly and wholeheartedly, and I went all in, and it was grit. Because I was working on the weekends, and it was not easy to get it going, but one of the best decisions I ever made.
I love that. Love that story of vision and grit, and essentially, even though the world was telling you, pushing back, right, you still went out and did what you believed in, and what you saw in your head. So I'd love to hear now how that model it started. We heard how it started, but how has it progressed? Where are we now?
Great. So I cut the ribbon October 1st, 2019 at the very first location. That was with phase one. So I was about a quarter built out of my first facility in our good old, I like to call it our international headquarters in Ottawa, Canada.
Mm-hmm.
And, I started with a big vision. I still have a big vision. So once that was proven, I was like, yeah, I'm doubling down. My wife and I, we sold our house and we sold everything we had, and we left Canada, and we're like, we're going to where the heat is. And it was either Florida or Texas. I wanted Texas. The wife wanted Florida. I'm in Florida. She won.
All right.
So, basically, that's where it is now. We have locations being built out in Central Florida, several of them. We have locations being tied up in North Carolina. We're looking at just expanding. So we've built out as a franchise as well. So I'm a franchisor. Longyards, we have a franchisee signed up, and we have new franchises jumping on board. And we're also expanding corporately, very hyper-focused in Central Florida. And that's pretty much where we are right now. We're building a great team as well, so I'm happy to dive into that part of it. But hyper-focused in Florida corporately, and franchising is opportunity-driven.
Gotcha. So you're expanding the brand now. You've gone to Florida. And what have been some of the challenges getting this idea out, considering how new it is, right, and untapped?
That's a big question, because there's so many. I started as a contractor and as a carpenter, right? Literally worked with my grandfather, putting furnaces down. I grew up on a farm. So, there's been many challenges, from going to the blue collar trades to trying to build an international company as a franchisor, learning real estate development, learning all these legalities, and then trying to build a team that is helping me, that sees the vision with me. So there's been many challenges on many fronts, but my why is greater than my how, and the vision is still strong. So, I plow through those challenges, but I'm happy to go into detail, whichever one, because the real estate has been extremely challenging, right? It all starts with the location, and then the franchising. I'm happy to dive into that, because there's a lot of legalities and loopholes, and not loopholes, but just challenges around that, and then building a great team. So I have kind of three areas that I went from carpenter to internet. Now
Sure,
I'm just going hard. So
yeah, just like any business, there's a ton of things, right? A ton of challenges that come across the board, and that we have to tackle, right, based on priority.
Yes.
I imagine one of the bigger priorities is actually the actual product, the real estate. So I'd love to hear about, some of the challenges you've had in the business, but have been overcome as well in your journey.
One of the biggest challenges is actually finding the right zoned areas with the right market, with the approved city, requirements. So you're kind of spending a lot of time going through the weeds, because some places they just say no right away. Like Ocala, for instance, like outside storage, deal killer, don't even look here. Then you have some that want a roof and an asphalt floor. So you really have to go through the weeds to make sure that you're finding the right locations, and that in the right markets. And this is all backed by Longyards feasibility. We need to make sure that this supports the growth of the Longyards, because our first multiple locations, they have to be home runs. We have to be extremely confident. We're not just going to assume or be a little confident. We need to make sure that we're very, very confident, and having the right location to support that is definitely crucial. So, there's been a lot of just deal killers, finding out through the process of getting down the 3 months in the due diligence period to find out this doesn't work for X, Y, and Z. So then we kind of find our deal killers right away. And now we've built an entire system of literally, and I went through 1,250 properties last night, actually, because we have software that allows us to target each of these properties. And then we lined up the right zoning in the right area, and getting the contact info. And now we're getting off-market deals on sometimes 30 cents on the dollar. So it's really a game changer. So we've kind of, went through the storming phase, went to the market, learned a lot, went back, got hyper focused and laser focused. And this is where we are. And it all starts with the location.
Awesome. And help me understand, in two avenues. For the franchisor, how the returns look like for some franchisee, excuse me, how the returns look for them?
Well, it's funny because franchising is great because you can't talk about money. It's really great. It's like, oh my God, even if you're buying a McDonald's franchise, it doesn't matter. It's like there's an item 19 in the FDD and you kind of have to stick to that. But talking from a real estate investment side, I can be a little bit more open. And
Sure.
it's pretty much like a value add as a multifamily. So because it's three business models essentially. You have the real estate, you have the Longyards on top of the real estate, and then however you decide to structure the financing is almost a third business model. So with my first property as an example, I think it spells it out the best. I mean, I put 200,000 into it roughly myself. Now I did a vendor take back. I was creative with getting an investor, but it was worth over $4 million. And I had around $1.2 million of debt and tons of equity. And then the cash flow is superior as well. So, all I could do is speak on the first location. And
Sure.
once the franchisee goes through which the numbers are looking really good, then he can comment on that from his perspective. But that's what we're aiming to do. We're looking at franchisees to do a massive value add on these locations.
Gotcha. So essentially you're getting, and your profit mainly comes from the rents that you garner from your storage tenants, correct?
Yeah. So like a cap rate on a multifamily, you got a cap rate on these facilities, and then your NOI with your cap rate gives you your future market value. And it's the same formula, which is why a lot of people, it's very similar in self-storage multifamily. And that's what we do. We go look at a location. We do what's the highest and best use, what are the revenues we can drive. And what's really unique about Longyards is we're quick. Like we can have a facility built out in months, literally up and running, and we can lease it up quick. And the build out is very low. So it's very advantageous and creative compared to a lot of revenues in the market. And because your debt is so low, because the build out is so low, your cash flow yields are so high. So the cash flow is very exciting, and the value add is also there as well. So it definitely comes down to the right location first. Mm-hmm. But in terms of the investment and the cash flow, it's very lucrative.
Okay, so I'm curious. So who's your typical customer that's going to you versus, let's say, a national storage facility that's more traditional?
Well, it's a good question because to put it in perspective, look at the marketplace, right? You got self-storage. You have contractor bays, right? And then you have a guy who's like me or a contractor that needs to lease his own small space, or you go and park your trailer at an outside storage spot. There's really no one filling that gap between a mid-space yard that's catered for you. So when you kind of look at it from that perspective, the horizon opens up and just how many different people need this. And to elaborate a little bit on the Longyards model, so one of our core values, is adapt, and we want to, be practical, and everything is adaptable as well. So our yards are made to move around. So everything moves around. And we introduce long boxes and long offices. So there's literally pop-up containers that you can put in your yard. So you have your inside storage and you have an office if you need to host your admin and keep an eye on all your materials. You bring you a camera, bring you power. So it's like it's your own little space, right? That's why Longyards are more than storage, because we are more than storage. So when you kind of just look at it from that perspective and take the magnifying glass out and you look back, you're like, wow, I believe there's a massive need for it. And that's why the vision is so big.
Awesome. And where do the investors fit in if they want to participate in these kind of projects?
Well, basically, it's a case-by-case basis right now on the corporate side if we are looking for investors. Mm-hmm. And because we're very focused on Florida, that's pretty much where the investment would be. We do have some investors reaching out just to invest in the franchise side because we are also doing long-term leases and the yields and the returns are also just very, very lucrative. So investors are reaching out, and then we put them on our database, and we nurture them and just make sure that they're involved in any upcoming deals if we're looking for that on the corporate side. And that's pretty much how we're working with investors.
Is there a range in returns that investors are seeing currently?
So I will say, it's definitely double digits, and what we can go up to some nice healthy numbers, but I like to be specific with the locations before we talk too much about that. And I know I've still got a fair bit to learn about all the SEC laws and whatnot, so I'm trying not to make any promises. That's why it's a case by case basis, and we present the project. But the returns are very good. I mean, my first location, it changed my life. So I mean, it's and the market is so flooded with multifamily and other properties that if you just factor in everything I'm saying, it's like the opportunity plus the revenues, it's allows a lot of return for investors and for us as a business.
Gotcha. So you've got a very, very interesting business model, not being tapped in. Seems like a blue ocean opportunity. What's some of the risks involved in this business model?
That's a good question. So, I mean, I like to kind of counter risk as much as I can. I mean, it's real estate backed, so that's a big part, and it's storage. So most people get it, and these are pretty two recession-proof foundations. And because the build-out costs are relatively inexpensive, your risk is relatively low. So if all things go to hell, you literally pack up everything, you sell it, and then you sell the land. Obviously, there's some costs and some due diligence loss there, but the biggest risk is not being able to lease it up. And if I can't lease it up, then that's a big waste of time mostly. But we haven't. Obviously, we're new. We have a big learning curve in front of us, but we're very strategic with where we tackle our locations, and we mitigate as much risk as we can for that.
Gotcha. Well, we're coming low on time, but I'd love to hear a little bit more about you. If you could wave a magic wand and change something from the beginning of when you started this business, what would it be and why?
From this business, from Longyards, or just myself?
It's from your business now.
Oh man, magic wand. Oh geez, that's a tough one. That's a good question. I would just be more documenting my process more to be more systematic, so I'm not repeating a few things twice.
Awesome. And is there anything that you're working on right now that our audience should know about?
Yeah, we're about to launch a podcast. Yeah, so we're launching a Longyards podcast, and it's catered to help small businesses because that's what we do. At the end of the day, we do help small businesses, and I'm really excited about launching that.
Awesome. And I'm sure our folks are going to want to get in contact with you. What are some best ways to connect with you?
Yeah, they can call me directly, 941-278-1995. That's my cell, or email me at clong@longyards.com. You can always find us too at our website, longyards.com.
All right. Well, Chris, it was a pleasure having you on the show today and learning more about your business. Sounds like a very, very interesting model with some huge opportunity and potential upside. So we wish you well and much success in your venture.
Appreciate that. It was a pleasure being here.
We trust that you enjoyed today's show. Visit archcapital.ventures to learn more about how you can leverage real estate investing to improve your life through passive income, financial freedom, and generational wealth.